Good morning. This is a DTN chart of corn futures. It's a monthly chart and it represents the continuation uh, chart. What we're seeing here is prices so low that we have eliminated all forms of inflation in the last few years. I like to look at these charts to get a better perspective of where things are historically. And right now, this tells me that we've just gone too far down. Same thing with soybeans. You can see the collapse we had in the month of July. We are very, very close to breaking the $10 mark and having prices almost as low as the Trump era when he was battling with China. This is just simply too low. The USDA has called for an average bean price on farm that you would receive of 11.10, and for corn 430. We're way below this level. Now, why are we going down? Two reasons. One, funds and changing weather forecast. Every time I look at the 8 to 14 day forecast, it goes from dry and a lot of times hot to wet, like we see now, and now cool weather in August, which is fantastic for the crop, right? Cool August temperatures equate to big crops. On the supply and demand side, here's what I was talking about with the USDA's average cash price. You can see that in the bottom. Their forecast $4.30. Last year they targeted 465. Back in February, they targeted a price of 440 with a 2.5 billion bushel carryout. Right now, our carryout is projected to be lower than it was in February at the Outlook conference, and yet the cash price is still sitting at 430. If you add 20 cents futures price to get a good futures price by adding 20 cents of negative basis, 450 is where futures should average for this year. We're way below that. Okay, so I'm taking a look at the USDA August report. What can we expect? Yield was at 181. I think with the good weather, the yield has to come up. I'm looking at 183.3. However, there's a couple things that USDA will change this month in addition to yield. I do believe they're going to drop harvested acres. The percent of harvested acres to planted acres is way too high, especially with the wet flooding conditions we had early. 83.4 down to 82.2. I also increased the the ending stocks. I'm sorry, the beginning stocks this year by increasing demand for the old crop. We dropped the beginning stocks this year from 1.877 to 1.97 billion bushels. That drops our ending stock number down to just about 2 billion bushels. In beans, the supply and demand report again is looking for 11.10 average price, as you can see on this chart from the July report. My expectation for the August report is to see a little bit of an increase in yield, a little bit of a drop in beginning stocks with better demand at the end of the year here for our beans because they're so cheap. And we're leaving pretty much the fundamentals alone. I do expect corn to rally after this report with some strength going into harvest because we just have gone too far, and for beans to at least stop going down. Have a great day.